Well, the Reserve Bank of India released its annual report today, which shows us that the RBI has raised its rainy day or its contingency fund massively by 1.15 lakh crore. This has taken the bank's contingency fund to a record high of 3.1 lakh crore. Now, what does this really mean? Profits or surplus of the RBI are to be transferred to the government after making various such contingency provisions and public policy mandates. With this fund increasing, it has driven up the RBI's expenditure and has left it with less surplus to share with the government. RBI in fact paid a decade-low dividend of 30.3 thousand crore to the government for the financial year 2022. Now, why is this important? The low payout may further negatively impact the government's financial position that is already under pressure from fuel tax cuts. And why has the RBI done this now? To meet risks including depreciation in the value of securities, risks arising out of monetary or exchange rate policy operations and other systemic risks. Majorly because of this fund expenditure, the RBI's total expenditure for this year is up by almost 4 times, while income is up 20%. Let's also get you the economic outlook from this important report. The RBI has said that the global economic recovery is expected to suffer a significant loss of momentum in 2022 due to economic costs of the war and sanctions. But the Indian economy is relatively better placed to strengthen the recovery that is currently underway. Flagging inflation concerns, the RBI also said that priority has been assigned to containing inflation with the target going forward. In fact, 40 central banks across the world raised rates or scaled back liquidity to tackle inflation. RBI says indicators already point to some loss of momentum in the economic recovery, but the momentum of India's economic recovery from the pandemic is expected to broadly continue in the current financial year. So that's a positive outlook from the RBI.